Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday technical analysis video is for Wednesday, October 27th, 2010. Let's get right into the action here. Markets are sharply lower today. Dow is down 125 points, NASDAQ is down 12, S&P down 11 on the day. NASDAQ overall is the strongest index out there, while the S&P and the Dow are down over 1% here as commodity stocks crumble. Why are commodity stocks crumbling? Because the dollar is soaring. Take a look at the UUP today, folks, and again, you can see a very, very nice upward move today. Look at this. This is where it closed yesterday, and this is where it currently is trading. Solid upward move in the market on the dollar, and that is pushing these Dow, the S&P, the NASDAQ, all sharply lower on the day. And again, you have to look at overall what is going on the SPY intraday as well. The first thing I would like to say right here, right now, and this is going to make a lot of sense to a lot of you guys that follow the In the Money Stocks methodology and the understanding of the markets. What is today? What's significant about today that was not there yesterday, or what was there yesterday that was not significant about today? The answer is POMO. There is no POMO scheduled for today. Look at what the markets are doing today. Now, it doesn't mean the markets are going to go any lower. They might even float higher towards the afternoon session, back a little bit off the lows. But overall, yesterday was a POMO day. What happens? Markets gap down and then rally all the way up. Why? Because the Federal Reserve is in there pumping money in to save the markets. Today is not a POMO day. What happens to the markets? Initially, people think that there's going to be a bid. They buy in. The markets collapse back down. They can't be supported. Shows you how much of a prop job this market truly is under at these stages. And again, it's all about POMO. It's all about the dollar. Dollar obviously rallying higher beautifully today, pushing the markets down. The big fear out there is how much of this QE2 is going to be done by the Federal Reserve next week. Now remember, next week on Tuesday is the elections. Next Wednesday, so a week and 1 day from today, or make that 1 week from today being Wednesday, you have the QE2 announcement, which will come in the form of the FOMC policy meeting announcement at 2:15 p.m. Eastern Time. The market's getting a little worried that the markets have rallied so much higher, and they're anticipating basically $1 trillion in QE2 minimum. And again, how much per month is going to be very important. And these are factors that people are now saying, wait a minute, is it overly priced in, or is it already priced in? What if they do a little bit less? They're getting a little bit nervous. In addition, again, without that POMO today, that permanent open market operations, that the Federal Reserve comes in and buys the tips, infusing money into the markets, without that to prop this market up, it's very tough for the markets to get any sort of bounce. And again, look at this market move today. The spiders are down about $1.18 on the day, just off the lows of the day. This key trend line was nailed. We had some great scalps in the intraday stock chat today. Fantastic moves. I called a buy right here at the opening pierce of the low from yesterday. Little double bottom action right here, right around the 117.85 level. It bounced all the way up. Market went all the way up to 118.36. At that point, that's a short. Take a look at that green trend line from a few days ago. Then the market comes back down. We fall through the double bottom, little in spirit of bear flag, and we go right to this level. What's so significant about this level? Let me expand the chart, zoom out a little bit, and you'll see, connect these lows. Take the low going back to early October. If you take the low on October 4th, connect it to the low here on October 19th, you get the exact low of today. And this is why trendline analysis is number one, and why every trader, investor, swing trader should have the research center. I teach this stuff. I go over it every single day. We dissect it. We make everyone understand all the proprietary techniques, not just trendline analysis, but everything else that we teach, which helps you become a better trader, a better investor. All right, and again, that's the Research Center at InTheMoneyStocks.com. It includes everything listed under the Research Center, folks, and it's an amazing type of thing there for the use of all traders. Hedge funds use it. I mean, you name it, people are using it, and the growing populations of informed investors are only getting bigger every single day. And again, you can't be left behind. It's one of those things where you get left behind. You're the one losing money in the markets while everyone else that has it is gaining money. Okay, now again, markets are slowly coming in here. Keep an eye on the dollar. If you close below this line, you have to look for confirmation. You did get two tails here. The market moved up. Now you're coming towards a double bottom. Double bottom will be support as well. You can draw a line right here and another little bit of a pivot at the very low of the day. Both of those will be support. So watch, there's a lot of support down here. I honestly would be a little surprised if they were able to flush through the very lows and actually confirm below it. Could they take it out by a little bit? Sure. Why? Because there's stops there. Oftentimes stops will be taken out by computer programs. Remember, high frequency trading makes up 70+% of the volume intraday. So today we traded 100 million on the SPY. 70 million of that is computers trading with computers. So what they're going to do is try to whip the amateurs out oftentimes by taking out a low very, very little bit there. They'll take out the low right down here, which takes out a lot of amateur stops. They get those shares, and then the market will bounce back up. The high-frequency trading programs will make money off of that, folks. They do it every single day. If you're trying to compete and you don't know the rules, you're insane. Bottom line, you're going to be putting yourself at a huge disadvantage and be in trouble in this market. You got to know what's going on. Market, again, is just floating down here. Volume, please note the volume. This is making it harder and harder for the market to sell off. The fact that the volume is getting so light. Again, pretty much at this point, I think the day is going to kind of go sideways. You might go down and test that double bottom, but overall, I think you could float up a little bit and then end somewhere on the downside. I do think the markets will be lower today, but I don't necessarily think they'll be down that dramatically. Under 100 points is what my guess would be, but it could be somewhere around 80, 90, or 75 points lower. All right, so we'll keep an eye on it. Again, we'll see here in the early lunch period or mid-lunch period if we go down, test that double bottom. But again, good support down here right around 117.30. There were some shorts that have been accumulated, very small shorts, because obviously before the elections you don't want to put yourself at a lot of risk, but a few shorts accumulated over the last couple of weeks in the research center. Those are paying off now as we are seeing them start to come down. Stocks like JCPenney are in the money over $1, and again with a break-even stop at this point put in. Have to understand that break-even stop. Good job for those of you that took that trade a week or so ago, a couple weeks ago, when we analyzed it and figured it was a high supporting level for a good short opportunity, and it is paying off beautifully. All right, and again, target will be down somewhere underneath the $30 level, and again, break-even stop, so it will not be a losing trade either. GLD getting hit today down $1.68. That is now in the money by about $1 as well. Good short there for those of you that took that. And again, this is all we're looking to do, folks. We'll play the short-term moves in this market, especially until after the elections. You just want to be aware. You want to get break-even stops when you're in the money decently. You want to protect and be a smart trader and investor. These rules will save your life when it comes to investing, folks. You have to be aware. Market's selling off a little bit more. Again, look for that double bottom. Decent chance of that. Volume, again, getting so light, but you're still seeing a little bit of selling. Let's go take a look at the dollar. The dollar continues to inch nearer and nearer the highs of the day. Take a look. Here's your high of the day pivot. If you get up there, you could be hitting around the lows of the day, which makes sense. Dollar at the highs of the day, markets should be generally at the lows of the day. Look at the volume, though, on the dollar die out, too. I mean, this is just crazy. It really is amazing how quickly the volume just vanishes from this market, both on the dollar and on the markets at this period. And that's why it's very tough for the markets to go substantially lower in the midday session or early afternoon session. There's just not a lot of selling volume or buying volume there. All right, and again, very easy for an institution to come in and prop the markets up as well if they're working with the Fed to do their type of dirty work. All right, let's take a look at a few other things today. What's the strong sector of the day? The financials. The financials are having a great day in comparison to the rest of the market. Goldman Sachs up 86 cents. Fantastic move there on Goldman Sachs. Also, take a look at Bank of America, up 27 cents near the highs of the day. These stocks continue to rally, and it seems like the financials like a strong dollar. And again, part of it is when the dollar is weak, all the money's going into commodity stocks. So once the dollar strengthens, then it's getting pulled out and looking for other places. The financials seem to be an area where that money can go. But either way, you have to look at that as being a very nice sector move today. All other sectors are pretty much getting hit, although the NASDAQ is not down that much today. As I mentioned before, the NASDAQ was only down about 12 points, which is only 0.5%, while the S&P and the Dow are down about 1% apiece. So it's NASDAQ is about half a percent less than the Dow and the S&P. Couple key stocks getting hammered today. Exxon Mobil, what a drop. Exxon has earnings tomorrow, so watch that very closely. Chevron is down $1.78. Look at the drop on Chevron today. What a drop. And by the way, folks, double bottom should be a scalping level right down here on Chevron. It's getting very close to this area. Right around the 83.30 area is probably a good little long scalp for maybe a 5 to 10 cent bounce on Chevron. All right, and again, going back to the SPY, just before we end this video, fun day, guys. I encourage you to join the chat room. Even if you have 1 hour a day, we just have so much fun in there, calling out plays, discussing the markets, talking about psychology, the Federal Reserve, what's coming up. Fun day today with lots of intraday scalps for money-making plays as well. But again, you can see the market's having a little trouble getting to their lows of the day because volume is just getting too light. All right, have a great afternoon, evening, and rest of the day. I will talk to you all in the nightly video. For those of you that are Research Center subscribers, join us at InTheMoneyStocks.com. Take care.